Alright guys, welcome back to the channel. So this is that chart where we have done the analysis in our last video, and we are expecting that ABC correction to the upside, and we see slight rejection over here. Right now you might be thinking, whoa, what is this? There's a lot of lines in this chart, and there is this ABC correction. I clicked for this Elliott wave tutorial or educational video. So that's why I'm not going to do the daily analysis video today, and we are going to get a fresh chart and get into Elliott wave theory. To do that, we will get into the new cycle, what we have here. So we will analyze this part over here, and also on the way you can see there are corrections over here. This is uptrend, correction. Okay, this is also a mini correction over here, and then we have another correction, uptrend, correction, uptrend, correction. So it's like a higher high, higher low, higher high, higher low, higher high, higher low. So you got the point. And this one is a larger correction that we are facing at the moment. This could be a part of this one, or this is another bear market where this move up is already finished in Elliott wave structure. So I'm going to explain, but if you are a beginner, I mean you do not understand anything about Elliott waves, then I might suggest you, or I might recommend you to go into the playlist where I have explained. I have made one Elliott wave tutorial video before, and I suggest you to check that video first, because that is a video which is beginner level. I mean, it's a very beginner level video. So I think you can start from that video first, and then after that can get into this one. So moving on into the Elliott wave structures. If impulsive move up, then we have a 1, 2, 3, 4, 5 as a 5-wave move up. Because if a bull market begins, then you get these type of structures which has 3 impulses in 5-wave move. In a 5-wave move, for example, this wave 1 from here to here, this is an impulsive move. And in the wave 2, we can get corrective waves, for example, as an ABC. So you can ask, what is an ABC correction? So again, the first video which I made for the tutorial video on Elliott wave analysis, that would be more helpful. But here I will give short explanation on this ABC correction. So in ABC correction, there is flat correction. These are the normal corrections, where it begins with this first A move, and then the B move can go slightly higher, or usually a little bit lower. And then after that, we get the extended C wave move. And then comes the extended flat correction, where what happens in the B here, A is the same size, and the B goes higher than this beginning of this A move, and this C extends as well. And then comes the running flat, which B is the similar move. It can come up and take out this high, and then the C never comes down here. So it finishes over here, and then the price moves up higher from here. And the impulsive wave, you can see here, this is the impulsive wave. So within this second wave, always remember, the first wave is impulsive, the third wave is also impulsive, and the fifth wave is also impulsive. Here also can be alternative waves. For example, for the first and the fifth can be, for the first can be a leading diagonal, and for the fifth wave can be ending diagonal. So the main rule for this Elliott wave, impulsive wave structure, here, number third, this 3 wave, the third wave cannot be the shortest. It can be shorter than the first wave, but it should be larger than the fifth wave. Okay, like this. Maybe the third one is slightly shorter than the first one, and it is bigger than fifth wave. Or it could be smaller than the fifth wave, but it should be larger than the first wave. And now you can see this is the first wave, and then the second wave cannot overlap or cannot exceed this level. It has to make a higher low. Okay, this is the second rule. And the third rule, the main rules I'm explaining here, is the fourth wave cannot overlap into the first wave. So it should make a higher low, but the higher low should be above this first wave top. So these are the important rules of Elliott wave, impulsive wave structure. And there is also fib time. It's called Fibonacci time extension. For example, let's say this wave 2 is slightly larger. The wave 4 should be larger or equal to this wave 2. It could be 1.5 or 2 times larger than the wave 2, but it cannot be smaller than the wave 2. So this is another rule in Elliott wave impulsive 5 waves move up. Now, the leading diagonal can be overlapping. Usually when the market maker does not want you to understand that the bull market has begun, the waves usually begin like this. So these 5 waves could be beginning of a bull market. So this structure usually confusing the traders. It usually tricks you in understanding that the market is still bearish and the structure is still building. So you might be not able to get into a long position. So now we will use these structure. Okay, this is a leading diagonal. And the ending diagonal also looks like this, similar. It can happen here. Okay, because this is becoming a little bit difficult to handle. So this can be here at this part, or this can be here. Okay. So can start on the leading diagonal way, and then after that can finish with the ending diagonal. So why I am keeping this one over here at the moment? This is not necessary that it has to finish with the ending diagonal, or it is not necessary that it has to begin with a leading diagonal. It could be another impulsive wave. So this is just for us to figure out whether it is an impulsive wave or it's just a leading diagonal. You can see the difference here with this wave over here and the leading diagonal. Leading diagonal is usually overlapping. It's completely disrespecting that Elliott wave rules. As I said, the fourth wave cannot get into the first wave territory. It's already disrespected that rule. And the second wave and the fourth wave cannot be same, or the fourth wave should be slightly longer than the second wave. This looks almost similar, identical to this second wave. And also, if you can see, the third wave should not be same, or it should be slightly larger than either of wave 1 or wave 5. So there is nothing which validates this to be an impulsive wave. This is proper leading diagonal. So impulsive wave should look like this. It can be a larger wave up, okay? So this can be also an impulsive wave up. So this wave can be here as well. This could be here in the beginning of this first wave, okay? And it can still end with this ending diagonal here. So if the first wave had impulsive wave move up, the third wave also can be impulsive, like this. Okay, the structure is not big enough to show you here. So I'm going to draw a different one. Let's say, let's use this a proper impulsive move. Okay, this is that impulsive move. Now we have to use impulsive wave. So this is that impulsive wave. Okay, 3 is larger, 4 and 5. We finish here, 5. And this could happen same at that third wave, but maybe slightly more larger, because the third wave itself is bigger than the first wave. And maybe let's keep this ending diagonal for the fifth wave. Okay, so that is ending diagonal. Now what about wave 2 and wave 4? This is where it comes, like there are a lot of different structures on the corrective structures. So as I said, ABC is one of them, okay, where this could be a normal flat here, and then this is the extended flat, okay, and then there is a running flat. So these could happen here on the second wave or on the fourth wave. Let's say we get a running flat over here. This could not repeat the same on the fourth wave. It could be an extended flat here. So the market doesn't do the same moves, or it cannot repeat the same moves within this one impulse. So this is an ABC correction here. And then it comes to WXY. A WXY always looks sideways correction. So where this X doesn't overlap or doesn't get higher than this beginning of this W wave, and the Y can slightly take out this W. And there is also another type of correction that is A, B, C, D, E. So that usually starts like A, B, C. What happened? Okay, this is not that tool. It should be this one. So A, B, C, D, E. So this is a triangle. You can see you can use this trend line and join them, and it will look like a triangle. Then the price travels from this zone to the downside. Or if this A begins like as a correction first, I'm doing it again wrong. So if it begins as a correction first like a and then B, because this happens in a bull market, okay, D and a E. And then you can use the trend line from this zone like this and join from A to this E. And then the bull market continues towards the higher prices. So any of these correction can happen within this wave 2 and wave 4. So let's say if extended flat happens over here, then we could have a WXY here, or we could just have this triangle over here. Cannot be this triangle because this happens in a downtrend, because you see after price travels here, it goes to the opposite direction, which is downside. So this is usually bear market price action. And now you can see that we have drawn, like this is one impulse here, but within that we have 5, 3, 5, 3, 5 waves. So within this 3 wave structures, we also have 3, 3, 5, like 3 waves here as an ABC, and again an ABC, and then 1, 2, 3, 4, 5. That is called 3, 3, 5. So let me draw that 3, 3, 5 for you. So this is A, B, C, and another from here, A, B, C, and then finally we have 5 waves move towards the downside. Okay, that's how it's counted as 3, 3, 5. And if you are expecting 3 waves in each, then it could be a WXY, because the move happens A, B, C, like multiple 3 wave structures on a WXY. So if you are counting any structure as a 3 wave structure to the downside, then it is usually a WXY. And in triangle, this is that bull market triangle. Also, all of these waves are all contain 3 wave structures. So 3, 3 up, 3 down, 3 up, 3 down. And now I will show you these structures in the price action here on the BTC chart. Now, if you see this uptrend over here, okay, we had the bottom on 2022 November, and then after that we had this uptrend. So if we consider this uptrend as a 5 wave move up, what you can see here, we will have to get into daily time frame for this structure to play out correctly, because in weekly time frame it will be a little bit harder to spot all those moves. So we will get into the bottom over here and we can draw all these structures here. So if you can see from the bottom, this was that bottom, we can see the wave, first wave up here, and within this first wave you can see still 1, 2, 3, 4, 5. There are 5 wave move up, and this is a leading diagonal. So for that we can get in to 4 hourly time frame and check but this will take a long time. 1 second. Okay, we need to go back like this. Okay, this was that bottom. So you will be able to spot it right now. Can you see this? We can see 5 wave move up. So that is 1, 2, 3, 4, and that was the 5th one. So that is the leading diagonal for you. And then we had the correction A, B, C. This was that A, and this was that B, and this was that C. So in this kind of chop here, it is very difficult for the traders to understand whether we have turned into bullish market already, or we are still making those lower highs and lower lows. But here you can understand after this ABC correction that we had made a higher low and the market wants to go higher. Why I draw this ABC as this one? There is also a reason for that. So I consider this move down here because I said in A you can see 3 wave structure here. This is A, B, and inside that C we have 5 waves. Okay, I have to go even more lower time frame structure to check this 5 waves. So that is too much into detail. I'm going to show you roughly how it can be measured. And this is that ABC to the upside. Okay, A, B, C, and then again an ABC to the downside. So if you go into the larger time frame, like for example, let's go into daily time frame, and in that daily time frame you can see the structure more clearly. So let's draw this one more time. You cannot see in this structure over here that leading diagonal and a ABC correction. So what you can see in the beginning here is only the impulsive wave up. Let's draw those impulsive wave up. So this is that first wave and this is that second wave. And then we have that third wave here. And then we got an extended flat over here as a 4th wave correction. And then finally we got that 5th wave up. So you can see within that 1, 3, and 5, these 3 waves are impulsive. So you can see internally we also have 5 wave structure here inside, and within this 4 and 2 I have already shown you that this was an ABC here, but this ABC was a regular ABC, but you can see the 4th wave ABC was an extended flat. So this was the A move and the B move already exceeding this beginning of this A move, and then coming back and also exceeding this A bottom here and making a new low. And then we have another 5 wave structure here. 1, 2, 3, 4, 5. If you go into lower time frame, you can see these waves very clearly. So this is impulsive wave up. And you can see now this structure over here, which we have sideways. Which of the corrective structures, which I shown just in the beginning of the video, which one you think this sideways correction over here? This is an extended flat ABC. So this is the beginning, you can see, and on the side you can see here, in here you can see this is slightly higher than this high, right? So this is already extended. So this move down here is A. Does not matter. Now we are not talking about the internal waves here. Okay, this is overall look on a daily time frame. This is a A wave, and this is that B wave, which is already exceeding this top. And now we have that C wave down. You see, you can exceed this bottom as well. When you put it here, you're already exceeding. You come back and sweep this liquidity here, and then from here you go higher. So that is already the wave 1, and wave 2 is finished. Why I said wave 1, wave 2? Because inside that wave 1 we have 5 waves here. So this becomes entire 1, 2, 3, 4, 5 now becomes first wave, and then this ABC becomes second wave. So you can see that waves has internal waves as well. So these are waves within waves. And then now we have to talk about that third wave. So for that, first we will get into lower time frame, and then we will mark all those higher time frame structures. So we have finished with this first wave, and then we have finished with the second wave. Now getting into the third wave. Third wave is larger wave. You can see it's very clear that this move up from here to here is definitely larger than this move up. So you can use the percentage also. From this bottom here, we had roughly 106% move. And if you can measure from this bottom here to this top, that is around 198%. That is almost twice the size of the first wave. So let's check the internal wave here. You can see that we have first wave here. This is sideways, again extended flat. And then we have third wave finishing here. And this is fourth wave. And then the final fifth wave finishes here. You see, the fifth wave is quite larger than the third wave, the internal wave. You can see this fifth wave is larger than this third wave. But it does not invalidate the Elliott wave count. As I said, the first wave is smaller than the third wave here. So it is within that Elliott wave rules. And the fourth wave is not getting near to this first wave. So we are good. And the fourth wave even larger compared to the second wave. It looks like twice the larger. So we are good with this wave here. So we have finished the third wave here. And now this is a complex correction over here. And as I said, this is sideways correction. Usually in the ABC correction, the waves are moving very deep to one side. Or if it's an extended flat, then both sides, yes, of course, it's sweeping the liquidity, but it is not larger in time. Only a WXY can make the structure larger in time. So this structure here is a WXY from this top to this bottom and to this top and to this bottom here. You see the X never exceeded this beginning of this W wave. X is within that top, and then we have that choppy sideways action. So if you want to see the inner structure over here, that is A, B, C, and then again A, B, C, and then again one more larger A, B, C. So that is a complete WXY correction there. So inner waves are also I have drawn for you. And now we will get into the final phase, because now we have finished this first wave, done with the second wave, done with the third wave, and finished the fourth wave. Now we have this final fifth wave here. So if you see this fifth wave here, this is that fifth wave which begin from here, because WXY ended here, and from here all this wave up is a fifth wave. In any sense, do you feel this is an impulsive wave? Yes, this is an impulsive wave. And usually, as I said, in the fifth wave, it's going to be very difficult to understand the wave structure, because the market maker is going to make it more difficult for you. So some of the analysts, there are a lot of YouTube Elliott wave analysts, and if you give them the count, they will say this part over here could be a leading diagonal. Okay, as a 1, 2, 3, 4, 5 finishing here, but it looks very perfect to be a leading diagonal, because you can use this trend line here and join them. Okay, this is perfect, a leading diagonal. Okay, and then after that we have that ABC correction here. A, B, this is a running flat. Okay, because the C did not come down to take out the low. And then you have the internal. You cannot go into smaller time frame here, but I will just draw 1, 2, 3, 4, 5. This is that third wave finished, and now we need that fourth wave. So we take this one as an ABC correction to the downside here. So we have begin with this leading diagonal here, and then after that we finished with this ABC here. Okay, this is the second wave. And then we have finished the third wave, which is the larger wave. And we have also finished with the fourth wave here, which clearly did not overlap into first wave territory. You can see this is that fourth wave, and fifth wave ended here. So this is that larger one. Okay, first wave. So we have finished 4 here. And this is also another ending diagonal here. So because we have started with this leading diagonal here. So we are finishing here with an ending diagonal. So the ending diagonal started from here as a first wave here. First wave is larger, and then the second wave, and this was the fourth wave here. Sorry, this was the third wave here, and this correction as ABC as a fourth wave, and then we have this truncated fifth wave. The fifth wave is smaller, but you can see that the fifth wave could not come up higher to touch the trend line. So this is a ending diagonal. There are analysts counting the wave structure as this one. And there is also another way to call this wave as a double 1-2 structure. A double 1-2 is like this. This is 1, 2, 1, 2. Okay, this is also can be internal 1-2 where the 3 finishes here, and then this entire move down is fourth wave. So now before I finish with this count, I would like to first say, if we begin with the double 1-2, then expect double 4-5s. So we have finished only with 1-4 here. Okay, this is 1-2, 1-2, right? So 3 wave, the third wave will be larger, and the fourth wave, then we have to finish with double 4-5. So this could be 5, again 4, 5. So that is how it is counted. So finally, when it ended here, this entire move up became the fifth wave from here to here. And within that move, the fourth wave correction here is an ABC. And this wave up here is a 1, 2, 3, 4, 5. And this one here is a wave 1. And then we have a running flat here as a wave 2. And then we have wave 3, 4, and a 5. And this one here is an A, B, C correction, followed by another A, B, C to the upside to finish the entire wave up. But this double 1-2 count is not the one which I prefer. I prefer the one which I said earlier, and that is a leading diagonal first here with ending with the ending diagonal here. So you can go back and look into that wave count, and that is this one. So when we look at this entire structure all together, now you can see that this wave here, the first one had 5 waves within that structure, and then after that we had ABC, that means 3 wave structure, and then the third wave also had 5 waves within them, and then the fourth wave had 3 waves. Again, this is a leading diagonal, ending diagonal, does not matter. This is 1, 2, 3, 4, 5. Okay, so let me finish that drawing here, which is the 5 wave move up. This is the 3, so 1, 2, 3, 4, 5, and this is that ABC. Okay, yeah, this one is that ABC. So we have in total as a 1, this is 2, this is that 3, 4, 5. That was the move. So again, this is that first wave, second wave, third wave, fourth wave, and the large fifth wave here. So fifth wave is slightly larger compared to this third wave, and third wave is larger than the first wave, which means this entire move up here have not invalidated Elliott wave count. Let's see the percentage here. This was 100% something, yeah, 106%, and let's see the percent of this one again, around 200%, and then we will see from this bottom here to the top, that is around here. So that is 152%. By the percent, you can still see that this move up was the biggest because it took us 200% higher than the first move. And the third move looks like bigger, but it is 152%. Again, the fourth wave is not overlapping into first wave territory. That is means this is the fourth wave and this was the first wave top. So we are very far away from here to here. Okay, so this is validated. The fourth wave is larger than the second wave, you can see. Okay, this correction was nothing compared to this one because this was really long time. They took very long time for this correction. You can see the entire correction took probably almost like maybe a few months here. Okay, this was 146 days. Okay, but when we broke this channel over here, that was almost 239 days. That is almost 6-7 months. Crazy. Okay, so this was the correction and it's larger than this one. So this is the count here. You can see this is how you can count the Elliott wave structure on the price action. I want to wrap up this video here, but I cannot leave the fact that this part of the price action I haven't done the analysis. So I'm also going to give you this analysis as a bonus here to understand what is the correction going on right now. So I'm going to make it very simple because we are on the daily time frame, and usually the correction goes like this. This is A, B, and I'm looking for the C wave correction. This is as a regular flat. So I'm going to also check the inner waves for you guys, and that is this entire move down here becomes 1A, and this is that wave up is wave B, and this is internally you can see A, B, C, whatever inside they have a three-wave structure there. So this entire move down, which is only the wave A for the larger count, and you can see inner three waves within them. Okay, and then after that you can call this one as a wave A, B, C. Okay, that is the internal wave again. And then if you want to count, I mean, smaller time frame structures, then also be my guest. You can just, okay, this is a homework kind of a thing. You can go into 1 hour time frame, or you can go into 4 hour time frame and check the structure here. This doesn't look like impulsive. This looks like a 1, 2, 3. Okay, 3 wave finishes. That means it's an ABC. Okay, it's very easy to understand. So now you can see here as well, this entire move up as a B, C, or a W, X, Y, you can call it, but this cannot be a Y because this is not a three-wave structure within that. So this is another ABC. And now what we are having is probably the impulsive move down. We are yet to figure out this structure over here, but this certainly looks impulsive to me. And that begins like a multiple 1, 2, 1, 2 structure here. You see 1, 2, 1, 2, and then this is 3, 4, 5. And then again there is one more 4, and in my recent analysis I have already talked about this multiple times, and I'm expecting this ABC to come up slightly higher here, fill this candle imbalance over here, and then after that move towards the downside. So my target for this bear market is around, the first target is around 51k, and we will see the 52, 51k around that zone, and we will see the reaction over there. And if there is strength, then we can have a bounce there, and if there is weakness, then probably we will have even lower prices on BTC, and that is next target will be around like 42, 43k. So now you can use these kind of structures which I have already drawn here and practice this wave structures by yourself, and comment down below if you do not understand something, and if I need to make more clarity video on Elliott wave analysis, then I would do it in my next video. And if you are interested in a daily update on Bitcoin or any altcoins, then you can check the playlist. We have a lot of video on the playlist, and if you haven't subscribed, this is the time to subscribe, and you can give a thumbs up to the video, and I will see you in the next educational video or next daily update.